morning, everyone. I'm David Paul, the Managing Director of VectorVest in the UK. The last time I was here, I spoke about some small mining shares, and I'm very happy to report that those all have done well. That was this time last week, and they look as if they can do much better over the next day or two. So today I want to actually review our most conservative trading plan, worry-free investing. And before I go there, I just want to have a look at the UK market and the American market. The first slide is the UK market. The candlestick plot, I think, self-explanatory. The red and the green triangles are our longest term measures of the trend of the London market, known as confirmed calls. And the last confirmed call up occurred on the 11th of November. So what's that, about 5-6 months ago. So the confirmed calls do a really good job in smoothing out all the noise and keeping us in sync with the longer term trend. Now, down below the price plot, we have our proprietary buy-sell ratio, which is VectorVest's measure of the breadth of the advance, the number of shares on a buy divided by the number of shares on a sell. And ladies and gentlemen, the price of the UK market is rising, but the breadth is falling, and that's always a worry. So while I'm holding positions personally, I'm fully invested, I'm worried, maybe unnecessarily, that divergence can blow away if we break through the last tops. But nevertheless, I'm watching stops carefully. The seasonality going into May, of course, is always in the back of one's mind as well, although I shall be taking the signals as they come. Nevertheless, it's been a great time in the UK market over the last year, and I'll show you that in a second. This is the American market, and clearly the American market in a strange place where we have the Dow, the top 30 stocks making new highs, and the NASDAQ, the tech heavy stocks, in fact, last night closing down below their 50-day moving average. Similarly, the S&P, which has got both old stocks and new economy stocks, had a very tepid bounce yesterday, and in fact closed below the previous day's lows. So all the indices not saying the same thing, confusion. Nevertheless, the longest term measure on the American market, which looks at all 8,000 shares that we follow, a very broad measure of the American market, is up after a period of whiplash caused by interest rate worries. So the price, however, has risen, and the buy-sell ratio hasn't come to the party. So again, that's always a worry when you see a market rising on very limited breadth. And one sector that has been moving across there is construction. And I'm sure you've all seen what's happened to the lumber prices over the last day or two. So let me move on to our proprietary worry-free plan. Our proprietary worry-free plan does its best to invest in the UK's safest shares that are also growing earnings strongly. So we're looking for some very special animals here, animals that have a proven track record of making money, but safely, and are growing their earnings strongly. The first measure is called relative value, and relative value measures the long-term price appreciation potential of the share in relation to a corporate bond. And this does a great job in working out which shares can grow earnings strongly over the next couple of years. So for our worry-free plan, on a scale between 0 and 2, we want to find shares with a relative value of greater than 1.25. In other words, they're going to outperform the corporate risk-free rate, the AAA rated corporate bond, by 25%. The second parameter is relative safety, and we want to find the UK's safest shares. So the VectorVest algorithm looks at the balance sheet, the income statement, the cash flow statement. It looks at margins, it looks at sales, it looks at dividends, dividend safety, dividend growth, sucks them all those numbers in and spits out one number, which, as the slide says, is a measure of the consistency and the predictability of the financial performance. And in our worry-free plan, we want to have high RS stocks, and my portfolio, personal portfolio, is in fact 75 to 80% full of high RS stocks. The process is quite simple. When we get one of those green triangles, a confirmed up, we buy high relative safety stocks with a relative value of greater than 1.25. Now, sooner or later, we're going to get a confirmed down. Do nothing, but simply don't buy any more stocks. Now, if you've got a confirmed down in place, we're much, much more likely to get stopped out, i.e. the share closes below the VectorVest stop loss. If we have a confirmed down in place, we do not replace, we build a cash position. When we get the next confirmed up, we go back to being fully invested. And that's the process. And since last April, since our confirmed up last April, that process has produced the top 10 shares which have got an RV of greater than 1.25 and a relative safety highest in the pack, have appreciated by 50% with no work, ladies and gentlemen, and the overall market's up 32%. So we've outperformed the market. Now, since last November, since the last signal, taken to the end of April, the top 10 shares are up 17% and the market is up 11%, and that's 37% annualized. So finding shares that have got a safe track record, that are growing earnings strongly, there's not that many of them, and buying them when the general market is rising, as confirmed by one of our confirmed call signals. In my high school rugby coach used to say, let the ball do the work, and that's what we're doing. Very, very few people sitting in front of the charts all day, looking at 5-minute charts here or 30-minute charts or whatever, will be able to, in fact, keep up with that. So if you're interested, that's me, david.paul@vectorvest.com, or just go to our website, vectorvest.co.uk. Thanks very much.